Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today is Steve. How you going, Steve?
Afternoon, Ollie. I'm good. It's been a couple of weeks now since we
Mate,
last had our last Monday Open, so ready to go.
feeling rested and relaxed going into it. Okay, so moving into the agenda for the video ahead. For any of our returning viewers, this will all look pretty familiar, but for any of our new faces, this is how we normally run it. So, starting off, we'll take a look at the major events from last week, have a look at our key themes, and see how this moved the prices. We'll then move into the week ahead section where we'll put a spotlight on some of the major events for the week ahead, see how this fits in with our key themes, and give our take on where we think the prices will go. Next, we'll move into the technical corner where we'll be putting a spotlight on a couple key different markets and analyzing them using a top down analysis and our technical indicators. And lastly, we'll go into the question and answer section where Steve and I will answer some of your guys' most commonly asked questions from last week. So, moving into the last week's section, on your guys' screen, you will see your top traded products from the week prior. I wouldn't say there's too many surprises in there, but I'm seeing three different indices markets in there. Probably not very surprising, given we are seeing a lot of all-time highs at the moment. But how about you, Steve? Any surprises?
No surprises, especially with the two gold pairings, so gold pegged against the USD as well as AED. Considering the long lines that we've seen down the corner at ABC Bullion, where people are actually lining up 50 minutes to actually buy physical gold, although I haven't seen anyone actually lug out any gold just yet.
A lot of storage units being broken open these days. Okay, so let's go into the last week. So, starting off last week, we did have some public holidays, obviously, being a reason why we didn't have a Monday Open last week. We had a public holiday in New South Wales alongside South Australia and the ACT. We also had China out on public holiday from Monday to Wednesday. So, for us in the APAC region, I'd say the major event from last week was the RBNZ cash rate decision, where they did surprise everybody by cutting their interest rates by 50 basis points against the 25 basis points expected, bringing their rates down to 2.5%. So the price reaction to that instantly was selling on the Kiwi. So the Aussie against the Kiwi actually gained 0.3% on the day. Actually reached a daily high up 1.07% following the announcement, but pulled back late into the session. Um, Similarly, on the Kiwi against the US dollar, we saw this traded into its lowest price since early April, so around the Liberation Day tariffs. It was down 0.94% across Wednesday and Thursday versus the dollar. However, personally, I do think this is probably more accounting towards dollar strength as opposed to the Kiwi weakness.
Yeah, and after the actual RBA, we also had the FMOC official meeting minutes, so from the US, which was there was no surprise with Stephen Moran being the decent. So we've mentioned previously that Stephen Moran is a Trump appointee. He basically was trying to get 50 basis points interest rate cut. The overall agreement was 25 basis points. But it was actually interesting to see there was hesitation from some of the members who were actually considering to actually keep on hold, which which actually would have shocked a few traders, especially considering that powers of speeches. Now we're looking at the FedWatch tool. So the FedWatch tool looks at the next of upcoming Fed meetings. So on the 29th of October, we're looking at about 95.7% for a 25 basis point cut, as well as 10th of December, which is 86.5% of another 25 basis cut. So fairly interesting to see the dynamics. It was almost priced in towards 100% prior to these sort of minutes. So it's interesting to see, especially with a lot of the US shutdown. So we've had the US shutdown. It's been since the 1st of October. So what that means, we're going to deep dive into that sort of question later as to what that all means. The other key notable event, well, we actually had the Canadian data. So it was good to see with the Canadian data that the employment rate is a bit better than expected, as well as the employment. It's a little bit different with how the Canada operates, so therefore the unemployment rate does look high, but that's fairly standard. But the notable event on Friday was really about Trump announcing 100% tariffs on China in regards to the rare earths. So China sent through a letter to the global countries in regards to how they want to actually provide rare earths to countries, and there was Trump during the same sort of time. Trump was able to get the sort of ceasefire deal, and he didn't win the Nobel Prize. He was actually thinking that he was going to win the Nobel Prize, so he might have been a bit angry that he didn't win the Nobel Prize, and just basically put a tweet out putting that 100% tariff on China. So it has caused a lot of disruptions with a lot of the indices. So we saw the Nasdaq. I saw probably 1,000 was the max. It ended up about 800 points. We also saw S&P. We saw a lot of global markets like Japan, Korea, the Germany, so Europe markets, basically react. It was a basically knee-jerk reaction to the tariffs in China. So quite interesting to see, and obviously with that, it also had a lot of impacts on gold, for example.
I mean, conversely to that, well, to his tone to China, that is, we also last week saw the Trump Carney meeting. So that was Trump with the Canadian Prime Minister. From what I've read on Reuters, it seems like all signs in that meeting went well, which I was quite surprised about. And it did actually lead to a lift in oil prices on Monday through Wednesday, contributing to some loonie strength as well. Also, on the key notable events, we did have the recently appointed French Prime Minister resigning after 26 days. Now, if I had to sum up the price reaction to that, uncertainty, a lot of chaos in the French market, specifically on the CAC 40. So that was quite interesting. So we saw a decline of 1.34% on Monday. Thursday, it rallied back to close at all-time highs. And then Friday, it fell 2.63% for its worst performing day since early April. So honestly, I got no idea where that one's going to go. It's a lot of uncertainty in the French markets these days. We also had the new Japanese Prime Minister announced. So as a result, or so I guess floated forward. So as a result, we did see some heavy yen weakness across the week, except for Friday, as we know, following the tariffs. So dollar yen gained 1.14% week on week, was actually up 2.53% prior to the announcement before falling back on Friday. The pound yen went up 0.53% and the Swiss yen went up 1.05%. So the yen strength on Friday did come, as Steve just mentioned, then as well, as the coalition was split. So it's not actually confirmed that the Prime Minister nominee will sit in the seat. So it did lead to some buying on the yen late week. Also on here, we've got the Trump announcement of a 25% tariff on medium and heavy duty trucks. So Reuters is reporting that Mexico is the largest importer of the medium and heavy duty trucks. So expecting to see a bit of a knock on the peso on there as well, followed by Canada, Japan, Germany, and Finland, surprisingly. So we could see some movement on the indices once that deadline does hit. We had the dollar yen hit the highest price since February 2025. As well, we did see a ceasefire announced on the Gaza and Israel front. So that's a really good one. Maybe you should have got that Nobel Peace Prize, but questionable. And then in terms of the all-time highs, we were definitely spoiled for choice this week. So we had gold and silver along with Bitcoin. Probably no surprises. They've all been on a bit of a tear this year. We also saw all-time highs on the Nasdaq, the S&P, the Nikkei 225, the UK FTSE 100, the DAX, and the Kospi. So the South Korean index. Good on them. We also saw all-time highs for the Euro yen and Swiss yen. So I did think that was quite interesting. I don't see too many all-time highs on currency markets. So definitely something to note on. Okay, moving into the week ahead. Starting off, we've got some public holidays. All of these are happening today. So we've got Japan, the US, and Canada all out for public holidays. So definitely should see a bit less liquidity in the markets. Could see some volatility. Steve, I know you've previously spoken about the impact of public holidays for Mondays.
Yeah, definitely. I think this is actually a really interesting time, considering that a lot of everything basically went down on Friday when it comes to Trump's tariffs. So the lows of liquidity, seeing that not only Japan, so within the Asian, the Tokyo session, as well as the United States. So it'll be interesting to see how London reacts. But a lot less lot less of liquidity. So expect a lot of volatility. Just to give you perspective, like gold at the moment, seeing that it's broken 4,000 for the first time, it's actually tracking better than the S&P 500 as an indice. So currently to date, it's I believe it was about 20%, and then compared to 15% when it comes to overall, or 17%. But yeah, it's one of those interesting ones. And yeah, a lot of that sentiment is also in regards to the distrust in the fiat currencies by governments. So when it comes to, for example, money printing, etc. So interesting to see how that will play. Looking at gold prices before, it was about 4,050, but we'll see how that eventuates. You never know. For one could be close by another all-time high. But yeah, looking at the RBA minutes this week, we're going to be getting a clearer picture as to how the RBA is seeing. We've kind of, based on the sort of inflation data that we had previously, we kind of expect that November, so Melbourne Cup Day, we expect a sort of hold based on the consensus. And it's a bit hard to tell whether there is actually going to be another interest rate cut towards the December meeting. So we'll get a bit of a gauge as to what the RBA is thinking. Again, similar, they were just worried about the unemployment as well as inflation, the stickies of inflation. But it also comes together with the unemployment rate. We're going to currently at the moment we're 4.2%, but there is an expectation of 4.3% this week. So seeing all that sort of data, it's going to be interesting because we've seen a lot of volatility, especially in the Aussie, and it's been breaking, trying to stay above that 66, but then breaking below. And we've talked about quite a few times in the technicals. So that, along with the Chinese of CPI and PPI data, will really cement how the actual economy is going. And I guess the most crucial towards the back end will be around the CPI as well as the PPI data from the US, as well as retail sales, unemployment claims. A lot of this of data, basically the Fed has been flying blind. A lot of the data has been withheld because of the US shutdown, and the based on the FMOC meetings, they were discussing about the risks of inflation. So this will really assist understand where we go next when it comes to the end of the year. So whether there are 25 basis points for each of the meetings. So it is a crucial point. And I expect that there's going to be a lot of volatility this week. So I think it could be like one of those sort of make or break weeks. It'll be interesting to see how everyone reacts, especially after the falls on Friday as well with the low liquidity. So interesting week ahead, but obviously focus on the risk management.
Thank you, Steve. And I think that brings us to the end of the last week one. So I'll move into the technicals. Let me share my screen with everyone on here. So up on your screen, you'll see the first market I wanted to speak about is the German DAX, or the DAX 40 as it otherwise is known. So given that they did hit all-time highs last week, I thought it might be a good time to talk about where we're sitting with the DAX at the moment, so we get an understanding of where we're probably going to be going. So highlighted on here, you can see the trading range, which it has been pretty respectful of since early May. Did briefly touch into this range around early March, fall off on Liberation Day, and has moved in since early March. It's been quite respectful of this range. A couple touches above and below, but nothing really substantial to hold. So moving into the daily chart and get a bit of an understanding of where we're sitting right now. So mid-September, we did see a hit towards the bottom of the trading range as around 23.3, and it was on a pretty strong bullish run up until last week, actually. So we did see a close above this trading range, above the 24.6. The session afterwards on the Thursday, we did see it trade into all-time highs briefly before selling off, and it actually closed right on the top of that upper level. For the trading on Friday, we did see that strong sell-off, as we've spoken about, as a result of the Trump announcement for the tariffs. But where I do think is quite interesting for the moment is that it didn't actually fall back towards its moving averages. It managed to find support close just above it. And for the trading day so far, the trading week so far, we actually are moving higher here. I'm seeing the moving averages are fanned out and they're all pointing upwards, which is telling me there is some buying momentum currently in play for the DAX. So in terms of where we're sitting now, I understand it has been very respectful of this trading range. So I'm looking for a signal to confirm that the bullish momentum is still in play. I think for where the prices are now, if we do see a move higher for the trading day or for the next 2 days up towards the top part of this range, if we see a break and a close and a hold above for 2 consecutive days, I'll be looking for an entry to buy with a challenge up towards all-time highs. However, if it does remain in the trading range, if we see a move higher to find resistance, trade back further, I'll be looking for selling opportunities as it moves further into the range. And also, if it carries on its trajectory for the day so far, seeing we are in the red for the moment, if it does trade further down and towards its moving averages, then we could see it move further into the range as well. So right now, I am waiting for a signal to confirm if the buying or selling is in play. But it's worth noting as well that if you are going for either side of that, it is worth having an effective stop loss strategy. So please make sure to assess your own. And also, if you did like to discuss your stop loss or your risk management strategy as well, please feel free to reach out to Steve or I. So the next market I did want to look at is the pound against the Kiwi. I know the Kiwi has been, especially for last week, given the size last week. Starting off, we are on the weekly for the pound against the New Zealand dollar, and we have been in a pretty strong uptrend dating back since really late December 23. Has been very respectful of this bullish channel as well. We can see it has been trading above its 20-day moving average on pretty much consistently dating back since start of 2024. Has dropped down to touch on the moving average, but it's failed to actually break further towards its 50-day moving average, which is telling me there is some very strong buying momentum in play. Blue line on your screen, you can see I've highlighted a key resistance price or a historically significant resistance price, that is, which most recently was tested in the start of April and last week, actually. So highlighted this one here because I think this will be a key price point to see if we are looking for prices to move further back down towards its moving averages or break away higher. So shifting this into the daily chart now, I can get a bit of an understanding for where we're sitting on price currently. So you can see on Wednesday last week, we did see a significant move up to find resistance at the 2.33 price point. This was off the back of the RBNZ decision, and it did quickly pull back on the date. So where we are sitting on Friday as well, I think the Australian and New Zealand currencies were some of the most heavily impacted by this tariff announcement. So we saw a sharp move higher on the Friday session. This week we did start slightly lower, but I do think the bullish momentum is still in play. But I am looking for a signal to see if this is going to carry through resistance and move higher, or if it will find resistance like it has previously and trade further down towards its moving averages. So for the prices today, I think if we see a daily hold and a close above this price point, and then start the next day positively, I'll be looking for buying opportunities to move higher. Otherwise, if we do find resistance at this price point, I'll be looking for shorting opportunities as it trades further down towards its moving averages. All right, so that brings us to the end of the technical section. So moving into the Q&A section where Steve and I will answer your guys' most commonly asked questions from last week. Steve, would you like to take it away with question one?
So question one is, why is the US government shutdown moving prices. So to give you context, the US government shutdown happens when Congress doesn't pass a budget or funding bill in time. So it needs to go through the Republicans as well as the Senate. Without the approval, the government can't legally spend money on its normal operations. So it's been basically stalled because of healthcare. And right now, the non-essential workers are closed. Trump has actually made note that there is actually going to be about over 4,000 people fired from the government. So it's obviously going to have a sort of impact to the unemployment rate. Also, federal workers may be furloughed when it comes to their work. So basically, it means unpaid leave. So they're working without being paid until it's actually stored with the budget. So there's going to be no government spending at all. Previously, the last US shutdown happened in 2018. So it was the 22nd of December 2018 to January 2019, which lasted 35 days. But essential services like air traffic control, military, security payments still keep running. So it's been confirmed that the American troops are still getting their paychecks on the 15th of October. But it is a disruption, and it is something to be conscious about.
Okay, and I'll take it away for question two. So, what are the signals and examples of a trend reversal? And I want to break this down into three main categories. So, first is patterns in price action. So, for example, a downtrend reversal, you'll be looking for consecutive higher highs and higher lows, or failure to make lower lows. Similarly, an uptrend reversal, you'll be looking for consecutive lower highs and lower lows. Next up, we do have for prices breaking historically significant resistance or support prices, or more specifically, breaking and holding above these key price levels. I think most common examples that we've seen recently would be the 4,000 for gold, 66 cents for the Aussie against the USD, or 120K for Bitcoin, because we do hear those price points banded around a fair bit. And lastly, we've got our indicators. So, for example, on the RSI, we've got our overbought or oversold conditions, as well as convergence in our moving averages. So, give a signal for potentials for trend reversals. Okay, that brings us to the end of the video today. A recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link for this one in our VIP chat room alongside Telegram. If anyone is yet to visit our VIP chat room or the Telegram group, please feel free to do so. Or if you're looking for help trying to access that, feel free to reach out to your relationship manager or Steve and I directly. All right, well, thank you very much for watching. And Steve, have a good one. I'll see you later.
Thank you, Ollie. Enjoy afternoon, everyone.